Good evening, everyone. I would like to thank everyone to this Facebook Live. My name is Kishana Myrie-Smith, and I am the founder and CEO of Tax and Business Advisors, where we provide accounting and tax solutions for nonprofit organizations so that you can focus on your mission while we help you with your numbers, with your accounting, with your tax, and help you get squared away. So today's live is going to be on the simple steps to strengthen internal controls for nonprofits. I want to start today's session with just a slight statistic. According to the Association of Certified Fraud Examiners 2024 report, nonprofits experience a median fraud loss of $76,000 per incident, which is about half the median loss suffered by for-profit businesses and government entities. So it's really important to note that fraud, misuse of funds is something that is prevalent in nonprofit organizations, and internal controls are part of the very important key to helping minimize or mitigate that risk. The one thing to keep in mind is that, for nonprofit, the operating budgets are often tight, and any loss of any size for your organization can be devastating and can ultimately impact the mission that you're trying to achieve. So whether you're starting off or you've been operating your nonprofit for several years, every nonprofit, especially those that get grant funding, need a solid internal control system in place to help build trust and ensure compliance for your organization. Okay. So what are internal controls? Internal controls are essentially the policies and procedures that protect your organization's resources. What they do is they reduce risk, and they also help improve transparency to the public, to funders, to everyone, by essentially ensuring that you have the appropriate internal controls in place. So what can go wrong without internal controls? When your internal controls are weak, several things can go wrong. There's the potential for fraud. There's the potential for misuse of restricted funds. Also, there's the potential for inaccurate financial reporting, and even audits can result in findings or penalties if you don't have internal controls in place. But more than that, you are risking damaging your relationship with your donors, your funders, board members, anyone that can expect transparency and accountability. You risk damaging that relationship if you do not have appropriate internal controls in place. So that's why a strong internal control system is really important. And it's not just a finance issue. It really ultimately is an issue that can impact the mission that you are providing for your organization. So step one to having a strong internal control system is ensuring that you have segregation of duties. And what segregations of duties basically mean is that no one person can have control over all parts of a financial transaction. So for example, a person who might receive a donation should be different from the one that records the actual donation coming in and different from the person that's reconciling the bank account. Even smaller nonprofits, that don't have a lot of staff can get their board members involved or even trusted and volunteers involved in helping to segregate the duties that you need for your organization. A couple of just quick examples of segregation of duties. The program director, for example, in an organization can approve a purchase, and then there may be another person like the office manager that would actually place the order or purchase the items. And then lastly, there could be a third level, a treasurer or a bookkeeper could pay the bill for that purchase, right? So again, it's separating the different arms of a transaction so that there are checks and balances in place so that different people are doing different things. Another example might be a staff member may enter payroll data for an organization, but then maybe the executive director or board treasurer may review and approve the payroll summary before the actual payroll payment goes out. Again, it kind of gets to having another set of independent eyes on a transaction before it actually occurs. Step 2, use of written policies and procedures. So your internal control should be a living, written document. It's not something that should be in a person's head, which quite often can be the case when it's a smaller organization or getting started. It should be something that is in writing. So that includes your financial procedures for things like approving your expenses, handling cash if your organization does handle cash, using credit cards if that's something that your organization uses, as well as any sort of grant spending. And the key thing to remember is that written policies help ensure consistency, and it just makes it easier to train new staff, team members, prepare for audits. And, having it in writing just makes it more official and the ability to share it with multiple people. And one good practice is to make sure that you're reviewing your policies at least annually and making any sort of updates for any sort of changes that may happen. So an example of some of the key policies that most nonprofits should have in writing include your expense reimbursement policy. So that would outline what expenses are reimbursable, how staff should submit receipts to get reimbursed, and who would approve a payment for an expense reimbursement. Cash handling essentially is talking about how an organization handles cash, or if you do donations, how you collect donations for an event, if that's the type of thing that your organization does. Credit card use policy, that again is getting to if your company or if your organization issues credit cards, there should be a clear set of rules in place on how to handle them and how to handle them appropriately. Conflict of interest policy is another big one that's really required by most funders and the IRS when preparing your tax information for your organization. And basically that is getting to the fact that board members and key staff should be disclosing any sort of relationships that could create a conflict of interest, and as a result, recuse themselves for any sort of related decisions that they may have a conflict on making a decision on. So conflict of interest is a very important policy to have in place. Another one, if you do have grant funding, would be a grant compliance policy. And that's if you receive restricted funds, you would document how you would be tracking a budget, some sort of a grant budget, and how you track the spending related to those restricted funds. And ultimately, what these policies do is that they protect you and they build confidence. Again, it's getting back to confidence and transparency with funders and the public. And it's just really important to make sure that when you're onboarding new staff and new volunteers, having a written policy in place makes that process a little bit more easier so that everyone is aware of the policies that they should be adhering to. Step 3, you want to make sure that you're reconciling accounts monthly. This is really very important and a very important internal control to have in place. Every month, ideally someone, not the same person that's doing the day-to-day transactions for the organization, should be reconciling the bank accounts. That should be a part of your normal accounting process. It also is important to make sure that a review is being done between the actual spending versus maybe grant budget spending or budgeted spending. And what this helps do is that will help catch any sort of issues early and avoid any sort of overspending of restricted funds. And lastly, regarding reconciliations, it's a good idea to share summaries with board members or finance committee members to keep everyone informed of your monthly process. Financial reporting is another key thing, but account reconciling on a monthly basis is kind of the underpinning of your financial reports to give some level of comfort that the information in the reports are accurate. Step 4, you want to make sure that you set clear approval processes. All spending should go through some sort of a approval process. So that gets back to, you want to decide on who approves purchases, at what amount are people authorized to approve up to. And it's always a good idea to require some sort of receipt or supporting documentation. So having a set of clear policies related to that is really important for the approval process. And in today's age, there's a lot of online systems. For example, QuickBooks, online, bill.com, or even a Google Drive can help you track approvals and receipts electronically. It's really about, again, ensuring that there's a process and a policy in place of who would be reviewing transactions. A lot of organizations usually set a dollar threshold that says above X dollars requires this level of approval, and anything above that may require another level of approval. But the key is that you have set processes and policies in place for people to follow. Step 5 is to protect your cash and your assets. So related to cash and assets, it's really important to make sure that you limit access to physical cash. And that includes any sort of physical cash, donations, perhaps, if that's collected, petty cash boxes, even debit and credit cards. It's really important to have the right protection in place related to that, because those are items that are very easy to be used and basically potentially abused for your organization. If you can, it's great to avoid cash altogether. Consider using checks and or some sort of secure digital platforms for collecting funds. It's also a good idea to create an inventory of things like equipment, computers, or any sort of valuable assets and check them annually, right? And what this will do is this will help reduce loss and or misuse, right? So if you know the key pieces of equipment or stuff that you have for your organization, keeping tabs on them and ensuring that your organization has it still in its possession, and doing that periodically helps to ensure that it doesn't disappear or someone is not misusing it or just outright taking it from your organization. And step 6 is board oversight and transparency. The key thing to remember here is that your board isn't just there for fundraising, but they really play a key role in oversight for the organization. So you want to make sure that your board members review financial statements, they ask questions, and that they really understand the internal controls that you have in place for your organization. And also, kind of getting back to what I said in a few previous slides, you also want to make sure that all your board members sign an annual conflict of interest disclosure statement. And really that, again, gets to ensuring that decisions are being made in the best interest of the organization and not in a way that is basically in their own personal interest in some way, shape, or form. So it's about that independence issue there for board members and decision making for your organization. Okay. And just a slight bonus tip regarding strong internal controls: use outside help. It's okay to hire a bookkeeper or a CPA like myself. Sometimes an outside set of eyes can help spot any sort of gaps that you within your organization might not notice. What a CPA like myself can do is we can help review your systems, we can recommend tools, and we can make sure that your organization is ready for any sort of audits, or whether it's an audit, grant audit, or a compliance audit of any sort. We can help you make sure that you're ready for that. And the one thing to keep in mind, it's like preventive maintenance, right? By doing this willingly and being on the forefront of it in a preventative manner, it protects your nonprofit from any sort of future problems that could occur. So just to recap, the 6 steps that I talked about to help strengthen your internal controls for your nonprofit include separation of duties, documentation of your policies, making sure that you're reconciling your bank accounts regularly. Also, you want to make sure that you're using an approval process for your purchases so that you have that documented. You also want to consider protecting your assets. Now, that's your cash, your checks, your any sort of equipment that you have, making sure that you're protecting them and safeguarding them for your organization. And lastly, involving your board. really leaning in on them from the oversight perspective for your organization and working with them in that way. Okay. And just a couple of final thoughts that I have just to wrap things up. Internal controls are really the foundation of your organization's financial health. So it's really important to consider where you are from an internal control perspective for your organization and consider the gaps that exist and work toward removing those gaps, removing any sort of barriers that you have in place to having a sound internal control system in place. Again, whether you're starting out or you've been operating for years, every nonprofit, especially those that get grant funding, really need a solid internal control system to build trust and ensure compliance for the organization. So I would like to thank everyone for joining me today. If this sounds like something that we can help you implement in your business, I will drop a link to my calendar in the comments below. Just click the link to book a call and we can see if we can help assist you with your internal controls for your organization. That's all that I have for today, and I look forward to connecting again soon. Thanks.